Hello, family. This is Melissa Miller here with eXp Realty. And today we are here with Michelle from C2 Financial.
Hi
She's
guys.
here to answer some of the questions. That's a lot of the information that's out there right now. And thank you so much for taking the time, Michelle, to come on and just clear a few things up. But before we ask that special question, which is, should I pay my mortgage? I want you to just tell us a little bit about what you do and a little bit about your company.
Sure. Thank you, Melissa, for having me. Just such a great time to be doing these webinars and, kind of educating the public and our, fellow real estate partners out there. So I'm a mortgage broker. I work for one of the largest brokers in the country, C2 Financial. So I have 100 wholesale lenders that I can go to fit almost any scenario. I've been in lending capacity for about 20 years, so basically my whole career. I've specifically been doing mortgages to homeowners the last 3 years. Before that, I used to do commercial real estate. Also used to do some really big syndicated finance stuff. So always in a lending capacity. So I love what I do. I love being on the side where I get to speak and communicate directly with the homeowners and kind of coach and counsel them and get in a position for them to be able to purchase a home. So that's really been, such a gratifying experience. So
you do a wonderful job, a great job.
Thank you, Melissa.
We're very pleased to have you as one of our partners, and really interested in hearing what you have to say. I saw one of your posts yesterday regarding deferment and forbearance, and I'm sure that a lot of people want to know what their options are right now. Today is April 1st, mortgage is due.
Mm-hmm. Yes.
What should they do? Let's start with what is forbearance? Can you explain that?
Yeah, so forbearance is where you actually call your servicer. So you have to make an arrangement. It's not something, and this is what I want to make very clear, because I feel like in the media, there is an assumption out there that, okay, just stop paying your mortgage. It's okay. We're all going to get through this. You don't have to pay your mortgage, which we do want to have, compassion and understand that there are people in that situation that cannot pay their mortgage or their rent at this time. And that's what these programs are for. But even when you're in that situation, you just don't stop paying your mortgage. You actually have to make a phone call to your servicer and they have to set up a plan for you. Because we're in this, unprecedented environment, none of us has done this before. I think what's going to happen is that it's going to get automatically approved initially when you call. But in the back end, you are going to have to prove some hardship. And then depending on the hardship that you're experiencing, that will determine what will happen long term. Okay, but to answer back to your question, forbearance is actually where the servicer will say, okay, you're on furlough right now, you're not working, we can stop collecting your mortgage payment anywhere from 1 month to 3 months. At the end of the 3 months, though, on a forbearance, your entire payment is actually due. Or, so let's say, for example, your monthly mortgage is $2,000 per month. And let's say you get a 3-month automatic deferment. At the end of the deferment, you're going to owe $6,000 in addition to your current mortgage payment. So that could really put you in a tricky situation because now all of a sudden you owe the 3 months plus your current month, right? So you either have to pay that in a lump sum in a forbearance, or they might break it up for you in 12 months and say you have to pay that $6,000 over the next 12 months, or an extra $500 tagged onto your mortgage. Okay.
Okay.
A deferment is something a little different, where that $6,000 that you didn't pay, they can sometimes put it to the back of the mortgage. So they're basically gonna extend your amortization, either do that or divide that $6,000 payment over your remaining term of your mortgage. So let's say you have 20 years left on your mortgage, then they might, stretch it out over the 20 years. That's deferment.
Okay.
So, but what's being proposed now is forbearance, right?
Okay.
And just to point out, neither one of those is forgiveness. And even though you might get it up front, you will likely have to qualify on the back end, and then that will determine, how they deal with those missed payments.
Okay. All right. Sounds to me like a forbearance for somebody that lost their job could put them into an even deeper hole after if they give them a forbearance for 3 months.
Correct.
That whole amount is due. That could put them into an even worse position, because then they get
Definitely.
all of that money, plus they have to continue forward with on-time payments.
Correct.
So I
What it does though, like it will stop, normally if you don't pay for that long, a lender will start foreclosure.
right,
But under this, because they've agreed to it, they're not going to do that, right?
right,
So a forbearance is where you say, hey, I have a situation this month, but I anticipate it getting better next month, and I'll be able to catch up, or I'll be able to extend those payments over a short period of time to catch up. So a forbearance, which could very likely be the case, prayerfully, with this situation, that people go back to work, and hopefully there's a flood of demand because we all want to get out of the house and go back to the movies. Yes. So hopefully people will be in a position that they're able to catch up.
right.
But I just wanted to make that very clear, because I've had clients in the past that have taken this approach, because when we have hurricanes and such in Florida, those options are there, and they are shocked that when at the end they find out that they have to pay it back. And not only that, it sometimes damages their credit. In the past it has. Now with this, what's going on, it's like unprecedented. So we don't know how it's going to be reported, but historically it has put a ding on people's credit as well. So that's why it's something where if you have to, take advantage of it. That's what it's there for. But if you don't, it's not worth it. It's probably not going to be worth it.
It sounds like if someone is in that position where they need assistance, that out of the two, whether deferment or forbearance, sounds like deferment would be the better option.
Absolutely.
Put it towards the back end or whatever, it would
Right.
give them more time to be able to get them back on track.
Yes.
So the next question that I had was about credit. So is there maybe, do you see going down the line a difference in how they would view credit, whether it's a forbearance or a deferment? Is one better than the other? Or do you think it'll pretty much be looked at the same?
Pretty much looked at the same. Generally speaking, when you don't make a mortgage payment, the credit, they are allowed to report to the credit agencies, and then the credit agencies will simply mark your credit report as 30 days late. They may mark on their approved forbearance plan, or they might put a little note on there as well. But like I said, we don't know what's going to happen with this COVID-19, but in the past, when we've had hurricanes, it's a hard 30-day, 60-day late. And I've had clients call and try to plead with the servicers and say, hey, you agreed to this. How could you be, reporting me to the credit agency? It doesn't seem fair. And they're just really hard-lined about it. In this situation, I'm hoping that won't be the case, because we can't, this is you know, like I said,
And
unprecedented,
anything else.
but we just don't know. So as much as, you know, people can avoid it,
Right.
they should. But yeah, it's probably going to be reported in some form or fashion as a forbearance or deferment, and show as like a 30, 60, or 90-day late.
Okay.
Um, and there's consequences for that, you know, in the
Yeah, that was my
future.
next question. As far as
Mhm.
somebody that might want to buy something else, you know, how has that been looked at in the past?
Yes. So in the past, typically you need like 12 months of on-time mortgage payments to be
Right.
able to get to move up in house or downsize or refinance, because they want to show that you have financial stability, and just the intent and resources to pay your mortgage, at least for the last 12 months. So
Right.
generally, yeah, that definitely impacts
So
someone's
this is
future.
definitely something for people to consider. You've had it in mind to get that bigger house or to downsize.
Right,
It's not the time to not pay your mortgage,
exactly.
because that'll, you know, basically take you off of that option altogether.
Yes,
Probably for
yes.
a few years even to be
Right.
to
Yeah, like I said, maybe this time will be different. We don't know, but if we're going by past experience, like that, those are the guidelines.
okay.
And I can even say right now, it is tightening up some of the mortgage guidelines just in anticipation of people perhaps not paying their mortgages. We're already seeing some tightening and some adjustments and interest rate, which equates to risk,
Right.
because the lenders are like, well, I don't know if I'm going to get paid, so I have to price this risk into this system.
Right.
So we're already seeing some of that tightening.
Okay.
Um, so that's another thing that, you know, for the
Mhm.
just long-term viability of your neighborhoods, your own economy, to just take it if you need it, but if you don't, you know.
So, what would you say to those that need a little extra cash? They want to tap into their equity. Is this the time for people to refinance?
This is an excellent time to refinance, especially for cash out refinance.
Mhm.
Cash out refinance is where you can extract the equity out of your home, but still keep a good cushion in there, 20%,
Mhm.
and use the excess equity to pay off any high, you know, credit card debt. Maybe you have a car loan. That can, you know, save people money tremendously. I would definitely, or if you just want a little cash on the side, because we're just in such a
Mhm.
crazy
Yeah, of
environment now,
course.
you know.
Right. And
Yeah,
a
it
lot of
might make
people don't have
sense.
reserves. They don't have, you know, they don't have anything to be able to tap into except for their equity. So,
That's right.
good to know.
And statistically speaking, you know, thank God the real estate market is very strong. We entered this very strong, and people have lots of equity in their homes,
Mhm.
um, and they probably have a good interest rate, but probably not as low as you could act now.
Mhm.
So it's an excellent time for cash out
What
refinances.
are the rates that you're seeing right now for refis, for a cash out refi?
So there is a little
I
bit
know you
of
can't
a,
tell me exactly, but just to
yeah. Yeah, I have to tell
change
you,
every
like,
day, I'm
okay, so
sure.
yeah, I can give you an idea. So I have a client, he's not doing a cash out. A cash out, the rate is a little bit higher, but I just want to give you a real life scenario.
Mhm.
I have a client with a around 60 credit score, and he's refinancing just to get his interest rate down. So he's not actually cashing out any money, but he's going from a 4.125 interest rate
Mhm.
to 3.375. Okay, so that's very good.
Really, really good.
So like, just to give you some perspective, a cash out might be a little higher, might be more like 3.5, 3.625, because the rate is still a little higher, but that's an excellent fixed 30-year rate, you
How much
know, and
do you
you
pay
can,
payment a month?
for him, he's saving about $250.
$250 a month. Wow.
Yeah.
That's
That's
really
That's
good.
excellent. And, you know, in this environment, you don't actually skip a payment because the interest is covered in your closing costs. But practically speaking, he's not going to make a payment for a month. You know, let's say we close April 15th, his payment is not going to be due until June 1st.
Okay.
So that also, you know, offers a little cash flow, you know, a little room for you to be able to use your current cash flow to like cover things and just create some reserves
Okay.
if need be.
Awesome. Any other information as we wrap this up that you can pass on?
Yeah. One more thing. So with the, you know, missing mortgage payments, I do want to remind people that there is a grace period on your mortgage. Most of the times it's 10 days or even 15 days. So like in an environment like this, you might want to take advantage of that. If you need to juggle things, that's perfectly fine. And typically, like I said, you have to check your mortgage statement or check with your servicer, but 10 days or 15 days, there's no penalties imposed, no late fees, nothing. And if you even needed to stretch it a little further, you know, you have until, I would say, the 25th to be safe to pay, so that you don't have, the crucial thing is that you don't pay past 30 days late, you know. But, you know, hopefully we get through this quickly, and, you know, those out of work will get back to work quickly. And that little cushion can buy them some time, you know, to be able to make things work and pay their mortgage.
And I know it's a very stressful time and many people have lost their jobs. And
Yes.
so for those of you that have lost your jobs, definitely, you know, don't take the stress on. Just
That's
call your
right.
mortgage company and see what they can work out with you, because you don't have
Yes.
any other options. So you want to make that call.
Yes.
And I want to know, Michelle, how can people get in touch with you? We're also going to be monitoring any questions you might have. Michelle will be answering them below in the comments. But if you'd like to get in touch with Michelle, how would they do that?
Sure. My number is 954-326-1950. And my email address, and that's my cell phone number. So text, call, it's all good. My email is michelle@mich-mortgage.com.
Awesome. Well, thank you, Michelle, so much for all of the helpful information. And I just want to let everyone know that I also have a resource list. If you would like the list that I have with free resources locally in Broward and Miami-Dade for families and kids, a lot of resources to help you make it through this time. If you would like that list, also I have major credit card companies and banks that are doing, offering assistance. I'd be happy to email the list to you. Just send me a message, or you can email us at info@mmillergroup.com. And we're here to help you. Feel free to give us a call at 954-388-7653. And thank you so much for stopping by again, Michelle. And we look forward to
Thank you, Melissa.
working with you.
Yes.
Have a great
Thank you for creating this platform, you know, for buyers and sellers and other real estate professionals to get educated on this stuff, because this is all new for all of us. So I appreciate you. Thank you.
Thanks, Michelle. You have a good day.
Thanks, you too.